Critical Man Pictures presents the Forex video training series, Greenbelt course, Bollinger Bands. Bollinger Bands are used to measure how volatile the market currently is. When the market is closely ranging, the bands will contract. When the market is spiking, then the bands will expand. Notice that when price action is quiet, the bands are fairly close together, and when the price starts heating up, the bands will spread apart. Yep, that's all there is to it. Yes, there could be much more information passed regarding the history of the Bollinger Band, how it is calculated, and the supporting mathematics and formula behind it. But frankly, you probably don't care, and I really don't want to type it out. What is important, however, is being able to use Bollinger Bands to help you set up trades, keep you in winning trades, and prevent you from entering bad trades. One thing you should learn about Bollinger Bands is that the price tends to return to the middle of the band. The whole idea behind the trade known as the Bollinger Bounce. By looking at this example, where do you think the price will go as it reaches this point? If you said back down to return to the middle of the band, then you're absolutely correct. What you saw is a classic Bollinger Bounce. The reason these bounces occur is because Bollinger Bands act like dynamic support and resistance levels. The longer the time frame you are in, the stronger these bands tend to be. Many traders have developed systems that thrive on these bounces, and this strategy is best used when the market is ranging and there is no clear trend. Now let's take a look how the Bollinger Bands would be in a breakout. The Bollinger squeeze part is pretty self-explanatory. When the bands squeeze together, it means that a breakout is getting ready to happen. If the candles start to break out above the top band, then the move will usually continue to go up. If the candles start to break out below the lower band, then price will usually continue to go down. Looking at the chart, you see when the bands squeeze together. Based off this information, where do you think the price will likely go? You said down, and you are correct. This is how a typical Bollinger squeeze works. The strategy is designed to catch a move as early as possible. Setups like this don't occur every day, but you can spot them a few times a week if you're looking at the 15-minute chart. All you have to do is wait for the bands to close together, the distance gap become narrow, wait for the breakout, and rake in the pips.